Hello, and welcome back to week 20 of the No BS Homebuyers live series, where we are breaking down the process of buying a home into simple, easy steps so you can go from thinking about buying to actually buying a home. And today we are going to be talking about offers and writing a winning offer. So I know writing an offer sounds terrifying, and that happens to a lot of buyers, but until you actually understand what's happening, it can be. So let's break it down so you know what's going on, and then you're not imagining yourself like signing your life away in a panic, because a strong offer isn't about being reckless, it's about being strategic and understanding what you're offering. So we're going to break down what actually goes into an offer, what different terms mean, and how to make confident decisions without feeling totally overwhelmed. So let's just remember that writing an offer is not just picking a number. There's a lot more to an offer than just the purchase price. And an offer is really just a package of different terms put into one paper that tells the seller how serious you are, how strong your financing is, how quickly you can move, and how risky or safe your offer really feels, and what exactly it is you're wanting. So let's just remember, when we're making offers, the highest offer doesn't always win because it is made up of a package of different things in different terms. So let's decode some of these terms that you see and give you these big pieces so that way you can actually understand what is in an offer and what you're agreeing to. So the very first one that is probably the most obvious is just the purchase price. How much are you offering? But honestly, that's one small part of the big equation. So a winning offer is about terms and not just dollars. So in addition to purchase price, which is really kind of easy to figure out, it's the number you're going to pay, whether that's the offering amount or the asking price, or whether you're going above or under, that would be considered the first thing in your offer, the purchase price. Next is what we call earnest money. And this one is pretty easily confused. People think it's just money they're putting down and it doesn't go towards anything. But actually, in another word or another phrase that we use for it is good faith deposit. So I say it's putting your money where your mouth is. It's saying, hey, here's some money down to show I'm serious. The good thing about earnest money is it does go towards your purchase in the end. And it just shows the seller that you're serious. In our local market in Lincoln, Nebraska, I would say 1% of the purchase price. So if it's a $400,000 house, you're typically seeing about $4,000. Sometimes you'll just see like a flat $1,000. That's not uncommon to see either. But if I'm a seller, I'm wanting to see a little bit more than that, especially if I have a higher priced house. And again, this goes towards your closing costs. So let's say you're buying a $400,000 house, you put $4,000 earnest money down. You would need to bring $396,000 plus closing costs to the table. And so these are usually also protected contingencies. So you typically will get your earnest money back if you back out during an inspection period or if you cannot get financing. About really the only time you're going to lose your earnest money is one, you write it off as non-refundable, or two, you get to the closing table and then you just decide, I don't want to buy this house, and you don't close on the house. You're going to lose your earnest money and you're probably also going to get sued. So I always tell my clients, let's just not do that, and use the inspection period and the appraisal period as those potential outs. But you should know during the inspection period. Anyway, I'm getting a little too into the weeds on earnest money, but it's not extra money. It's just commitment money saying, hey, here I am. I'm serious. I'm putting my money down. The inspection contingency, which I just touched on a little bit, is a time frame, or if you are keeping your inspection contingency in place, it's saying you get a certain amount of time to do inspections on the house. And that can protect you from major issues that are discovered or even minor ones. But please hear me on this. You can write off your inspection contingency, but I highly do not recommend it, especially for first-time home buyers. waiving an inspection may be a win to getting you the contract, but it can be very expensive later, especially if you don't know what you're looking at. So please keep your inspection contingencies in there. You can also do what we see a lot of is info-only inspections. You're still keeping your inspection contingency in there, and you're still able to technically back out during your inspection period. But you're preemptively stating to the sellers, like, hey, I'm not going to ask for anything. Now, people will put that and then still ask for things. So it's kind of a moot point at times. But in theory, you're just not going to ask for anything. And if my clients write that in, they're not going to be asking for anything. And I make that very clear with them. Financing contingencies. So this one is if your financing falls through. So let's say you got pre-approved at a bank, and then, something came up in the process and they said, actually we can't lend to you. That gives you an out in the contract and should give you your earnest money back. Though some buyers will forfeit their earnest money out of convenience for the sellers, or inconvenience for the sellers. But this is why pre-approvals matter so much in sending in that information ahead of time, so you don't get through this process and go through your inspection period, pay an inspector, pay potentially an appraiser, and then find out, oh, you can't even get financing. That's why we get pre-approved. Another thing in an offer is the closing date. And this one can be very powerful. Sometimes flexibility really matters more than the price. A lot of times there will be a seller moving into a new build construction. And if you know anything about construction, very rarely are they on time. So if you have flexibility on when they can close on the sale of their house, so that way they can close on their purchase, you may be winning an offer versus price. And then also if you're flexible on when they can, give up possession. So if you buy the house and then they want to rent it back from you for a couple weeks, that can win you an offer as well. Or just really any time restrictions or preferences the seller is looking for can really help an offer. So typically the best offer that wins is the one that solves the most problems for the sellers. And then other things that can be included on offers would be things that are included in the house, because not everything automatically stays. If it is attached to the house, in theory, it should stay. What attached means can be kind of up in the air, but maybe they're not going to be leaving appliances or washers and dryers or hot tub, or specific, like property specific items. Like a lot of times I see riding lawnmowers for houses with big yards or acreages. Whatever you want in the offer needs to be written in there somewhere. Whether you put that on like a bill of sale or in the actual offer, it needs to be stated in some manner. And that can be something that could make you not look as strong as another offer. If you are asking for all the things that they weren't planning to include, they're going to start tallying up numbers on that as well. So just be mindful of what you're asking for. And if you do want it, you need to make sure it's in writing. Another negotiation tactic is home warranties. So you may ask a seller to provide a home warranty, or you can pay for it, or you guys can split it. But the benefit of having that in place before the inspection period is a lot of times you can use that in the event something comes up on the inspection. So it basically is a contract that can help cover certain repairs or appliance breakdowns, either during the escrow period, which is like the under contract period, or even after. So, let's say the house has 20-year-old furnace, water heater, and AC, and you're like, well, that's going to be really expensive to replace. And the sellers are like, why? It's working great. A good halfway point would be to have them pay for a home warranty. So that way, you've got at least a year of coverage. So that way, if it breaks down, which inevitably something will, you've got something to kind of help you with after you just put a bunch of money down on a house and are typically a little less flushed with cash. So home warranties can be great for those situations. And also, if you suspect something's going to come up on an inspection, to have that warranty in place before the inspection, because you may be able to use it for that. And that can save you and the seller a decent amount of cash. But that is also completely negotiable, whether you pay, they pay, or you both pay. And please note, a home warranty is not the same thing as homeowner's insurance. Those are two separate things. And it's not a magic fix-all. There are a lot of controversial discussions on home warranties online if you want to do some digging. But personally, I've had great luck, and it brings me peace of mind for a lot of my buyers and sellers and for my properties, especially first-time buyers. Another thing on the purchase agreement that is negotiable is the title company. Oftentimes, if the seller is buying another house, they already have that lined up and already have a title company in place. So if you want to look stronger to that seller, use their title company. Your realtor may have a preferred title company that they work with, but ultimately, as a buyer, you are the one who gets to decide. So if you need that to help make your offer look a little stronger, ask who the seller's already using, or you can even shop around, but most of the time they're pretty similar in pricing. But a title company, what they do is they verify the ownership of the property that's for sale. They check for any liens or any money owed to people that need to be paid off with the sale of this house. They handle the money transfers and the closing paperwork. So they're an essential player, but oftentimes get looked over and not used as a negotiation tactic. So don't forget about them. And then let's talk closing costs. Closing costs are another thing that are noted on the purchase agreement and that are a negotiable item. So obviously, on top of the purchase of the house and the loan that you have for the house, there are going to be closing costs, which isn't always explained to buyers. And we'll probably have to go into a little more depth on closing costs at some point. But they can be made up of lender fees, title fees, escrow fees, taxes and insurance setups, different recording fees, and things like that. So these can be typically, I would say most contracts are split half and half buyer, half seller. If you want to look really strong to a seller and you need something additional to compete on, offer to pay for their closing costs. That's an option. Or if they're in a stronger buyer's market, ask them to pay for yours. And that means just less actual cash you have to bring to the table. So that is something negotiable on the contract as well. And a lot of buyers, they're always thinking about saving for the down payment, but they don't always think about the closing costs. So make sure you're kind of taking that into account when you are running your numbers, but also understanding that it can be negotiable. So something to consider. And the main thing about offers is it's not just the price. It is about negotiating everything. And those were the things that you're going to see written on a contract, like pretty much every time. But there's typically always a blank space in the contract called other provisions that you can add in whatever you want. Obviously, try to keep it kosher and legal and use the advice of your realtor for what works in your market. But we might even do another topic of kind of digging down onto creative offer negotiation strategies. But let's talk now about the biggest mistakes. These are ones that I see pretty often, and especially in a highly competitive market. Probably the biggest one is emotionally overbidding. Anytime something turns into an auction, we get emotionally invested and we just keep going up and going up. But in order to avoid overbidding, look at the monthly payment, look at what you're actually comfortable with, and take a step back and just look at the numbers and try to detach from the house. Because you might not be that happy with the numbers. And then if you can't stomach the numbers, you're not going to have a very good time living in that house. So that is a big one I see. And then one I saw a lot during COVID that I think we're seeing a lot of people kind of regret at this point is waiving protections. And that biggest one would be waiving inspections. So don't necessarily waive those things, especially if they're important to you or you have no experience in owning a home, aren't a contractor, aren't an inspector. And even them, they tend to get inspections too. So don't waive things that you're not comfortable or knowledgeable about, because it will probably come up later and make it not as nice of a transaction or not as nice of a memory. And then another thing that I see is comparing themselves to other buyers very consistently or constantly. You may have friends also buying, or you may be considering like comparing yourself to the other person offering, but quite frankly, most states don't have open offers where you get to see the whole offer. So you probably really don't even know what the other buyer is bringing to the table. So don't compare yourself to them. Do the best that you can. Do what makes you comfortable, what works for your finances, for your lifestyle, and for your needs. This is your game, not theirs. There are plenty of houses. You will find one, and it will be okay. And so just play your game. Don't play anyone else's. I think it's easy to get caught up in the, constant comparison. I mean, we do that in everyday life. We don't need to do that in buying houses too. Just do what works for you. And then kind of going into that as well is, just because you lose one house doesn't mean you're never going to find a house. Yes, we get deeply emotionally invested in the houses that we put offers on because we are imagining ourselves living there, and it is hard to detach. But you have to understand there are potentially going to be other offers, or a seller just may not like your terms and just may not accept. And you know what? That's okay. There will be another house. It does take a little bit of time, and that's okay. But I truly, truly feel when something doesn't work out for my buyers or my sellers, there really is a reason. And we don't get to know that reason. But things just happen, and hindsight 2020, it just probably should have been that way anyway. So don't get too caught up thinking that you're never going to find something else. Because we have to remember that this is a long decision, a long game decision, and we don't want to make a 30-year decision based off of 30 minutes of emotional reactions. So don't go overbidding that house. Don't go selling your soul just so you can get the house you think you want. Stick to your preparation and you will be better off. All right. So one other thing I want you guys to understand is you do not have to memorize what all of these things mean. Your realtor should be able to walk you through every single one of them. But it is nice to understand what you're looking at, what the big picture is, and be educated enough to ask questions. Because confident buyers aren't the ones who know everything. They are the ones who ask questions before signing. So if you want help understanding what these different terms are or what makes sense for your situation, that's exactly what I help buyers navigate. So don't hesitate to reach out to me. Or if you're not in my market, I would happily connect you with an agent that can explain these things to you specific to your market. But next week, we're going to dive into a little bit more on earnest money, what that means, what's expected, and that is going to be another step to give you more clarity to move forward with confidence. So thank you so much for joining me for week 20 of the No BS Live Home Buyer Series, where we are breaking down the home buying process into simple, manageable steps so that way you can go from thinking about buying to actually owning. And I will see you next week.